Hello everybody, I'm Sue Ogilvy and it's my pleasure and privilege to speak to you today about how Western Australian farmers are helping to shape the future of natural capital accounting. So I'm so sorry that I wasn't able to be here today in person, but with the wonders of modern technology, it's fantastic to at least be here virtually. So I'm speaking to you from the East Coast, from Ngunnawal lands, and I pay my respects to their elders past, present and emerging. So we've been researching natural capital accounting for some years now. My own PhD research was in how we could extend and adapt the corporate accounting standards to include natural capital of a farm enterprise. Along the way, we've had the delightful opportunity to be involved in some practical projects, including one with the Indigenous Land Corporation. We were part of the Australian Bureau of Statistics team that helped update the accounts for the Great Barrier Reef. And we're currently involved in some wonderful projects over here on the East Coast, which are doing farm level natural capital accounts. One of them is led by the La Trobe University and the other one's led by CSIRO. So my talk today is going to cover what we mean by natural capital in agriculture. I'm going to talk about what we mean by natural capital accounting as distinct from the measurement of natural capital. I'm going to give you a little worked example, and I'm going to finish my talk by giving you an overview of a wonderful project that we're involved with your Western Australian farmers, supported by Perth NRM and Commonland. And I think that a couple of the participating farmers might be in the audience today. So when we're talking about natural capital in agriculture, of course, what we're talking about is your crops and your pastures. We're talking about your woodlands, your remnant native vegetation. We're talking about shelter belts. We're talking about your above and below ground water resources. And of course, we're talking about your soil. And soil, of course, is fundamental to the productivity and sustainability of agriculture. And what we do above ground with our livestock and crops affects our soil health. But it's interesting that in accounting for agriculture, that a lot of these natural capital and ecological assets are not included. So for example, in the current accounting standards for agriculture, we're only really accounting for things like livestock or crops for harvest, trees for timber, orchards, fruits, vines. We are certainly accounting for things like tractors and irrigation equipment, fences, so produced capital. And of course, one of our major assets in agriculture is of course our property. We think that provides an incomplete picture of the business because natural capital accounting can add these ecological assets, the soils and woodlands and remnant native vegetation that are so important in driving agricultural productivity and sustainability. So what natural capital accounting does in order to add ecological assets is it draws on a global standard called the United Nations System of Environmental Economic Accounting. And that's been developed to help countries include their environmental resources in their national accounts and in their estimations of GDP. And what we do with natural capital accounting at farm level is we apply those standards, but we take them right down to a very fine scale that's needed to give farmers information about how to manage natural capital, how they're managing it, how it's performing, and what they could do to change the performance if they wanted to. Because we know that natural capital and ecological assets provide enormous benefit to farms. They provide plenty of goods for private benefit, for example, by providing shade and shelter for livestock and crops and improving productivity by sheltering from bad weather. We of course know that exotic and native pastures provide important forage for livestock and fodder for sale. We know of course that how we manage these resources has an effect on how healthy and productive our soils are, and of course our soils are essential for providing water and nutrients for crops and livestock. We are also aware increasingly of the importance of native vegetation as habitat for beneficial insects to help us to lower our reliance on herbicides and pesticides, for example. But farms produce significant goods for public benefit. By providing remnant native vegetation and other resources, then farms do an incredibly important job of conserving biodiversity by providing habitat for wildlife, protecting soils from erosion and protecting waterways from soil erosion and leaching. But sometimes these public benefits are actually generated by the farmer actually acting just in their best interests. So for example, when a farmer manages the soil for productivity and good health, they're also probably maximising the storage of soil or organic carbon, which of course is a very important public benefit. But we have to acknowledge that sometimes natural capital actually provides farmers with disbenefits, for example, by providing habitat for pest animals and plants. So when we try to include these ecological assets or natural capital in our farm accounts, what we do is we quantify them. We quantify their extent and different types of natural capital and its condition. And we try to estimate the contribution they're making to the farm business, to the farmer personally, and also to the public good. We link that information with how the natural capital is being managed and whether it's expected to change, whether this management is expected to change the type of natural capital, its extent or condition over time. And then finally, we can estimate and provide information about how the current form of natural capital and its management is affecting the resource use efficiency of a farm and the types of any environmental bads or externalities that are being generated by the farm. Now, of course, the foundation of natural capital accounting is measurement of the natural capital. And what we mean by that is getting biophysical measures of natural capital type and change to condition over time so that we can produce a time series and estimate the trajectory of natural capital changes. And there's lots of ways to measure natural capital. We've been doing it for decades. For example, we know how to measure soil health using chemical, physical or biological methods. We know how to measure native vegetation. Depending on which state you're in, you'll choose the state protocol to measure the health of your native vegetation. And more recently, the Accounting for Nature business has produced a beautiful econ which provides an easy to understand index of change to natural capital. We can put the native vegetation in context in a landscape of a farm and understand its contribution to the public benefit of biodiversity, for example, by the habitat area that it's providing and in the context of the broader landscape. And certainly if we're wanting to understand the functionality of our pastures and the productivity and quality of the pastures for livestock and forage and their ability to capture resources such as rainfall. We can use things like landscape function and pasture condition analysis, and we can put that into easy to understand classes of pasture conditions. So in the Western Australia, of course, in the rangelands you use the good, fair, poor condition classifications. And we choose these different measurement ways of natural capital based on the levels of rigour that we're interested in. So for example, if you're making a decision immediately, you might use an informal self-assessment to help you decide whether, for example, to move the livestock to a new paddock or to graze them for a little bit longer. Usually in accounting, what we use is the more rapid assessment by an independent expert so that we can get the coverage of natural capital at a reasonable cost. But sometimes you have to choose for rigorous and scientific data collection and investigation because you've actually either got a scientific purpose or you're trying to track the success of an intervention that you're making. And so with this foundation of natural capital measurement that's selected fit for purpose depending on what you're measuring and why you're measuring it, then natural capital accounting associates those measures with changes to financial and non-financial transactions and activities. And I think it's really important that we think about including natural capital in the accounts of enterprises, because I think that without the measurements of natural capital included in accounts, then we might be giving stakeholders and farmers a misleading impression of how well the business is performing. And I'd like to give you a little example of how that might be. So in a farm business, you would typically see these elements in your farm accounts. So you would see the lists of activities, for example, things you've sold or things you've purchased. You've got an assets list that lists all of the assets of the business, fences, irrigation equipment, tractors and so forth. The total of assets tends to be the measure of the equity in the business or the wealth of the business. We're very familiar, of course, with the concepts of income and expenses. One concept that might be less familiar is the concept of comprehensive income. And this is used by the accountants when an asset increases in price, but where the increase isn't realised in terms of, say, cash in the bank. So to properly recognise the increased asset value in the wealth of the business, there's a concept of comprehensive income, and I'll try to illustrate that. But I'll start with a simple example of just purchasing and installing some pipes and troughs for stock water. Now, that's an economic benefit to a farm because it improves the quality of water for livestock. And in purchasing and installing that equipment, you incur some expenses, let's say 100 units of expenses. And what the accountant does is they say, well, I've transferred 100 units out of cash and I've put those units into our asset account called equipment. And so there's no change to the business value. Another example would be an increase in the value of land. Let's say, for whatever reason, your land has increased by 500 units. And the accountant explains that increase by saying that there's been a comprehensive income adjustment. And what that does is it says that therefore the equity or the wealth of the business value has increased by 500 units. But because natural capital is missing from this picture, if we decide to invest in natural capital, say for example, improvement in pasture or soil condition, then we would see the expense of 20 units to, say, purchase inputs for soil and pasture improvement, or to establish shrubs to fill a feed gap or reduce livestock methane emissions. And that would look like the business has reduced in value by those number of units. But if that investment has created 80 units of valued productivity for the farm, then by adding the natural capital asset and the comprehensive income to the farm accounts, then we can estimate that the overall net increase to the business is 60. And we think that if natural capital accounting is widely practiced, it's got the potential to provide very useful information about the impact of natural capital on the comparative performance of farms. So the opportunity to work with the Perth NRM and Common Land and our leading West Australian farmers on how we do natural capital accounting at farm level, the leadership provided by these learning case studies is absolutely essential. And what this project aims to do is to understand how natural capital accounting can be used by farmers to help them to measure and manage their natural capital, how they can increase the benefits from investment in natural capital, how they can assure the sustainability of farming systems and improve resilience and productive capacity. In terms of the external stakeholders, we think that having farmer leadership in the development of natural capital accounting is going to be very important to support informed public and industry investment into good land stewardship and build farmer consumer reciprocity. And by that we mean helping consumers and supply chains share a more equitable share of the cost and responsibility for management of natural capital. And so the Learning Case Studies project has got 5 glorious test pilot farmers and their accountants and consultants. And what we're doing together is we're testing the emerging standards and guidelines for natural capital accounting and documenting what we learn. So we're learning about how we need to organise farm information for natural capital asset accounts and resource use intensity reporting, how we brief ecologists to gather the information we require, how we present the information so that it's useful for farm managers, and try to balance the cost and benefit of preparation of natural capital accounts such that farmers and citizens get very good information at the right price, if you like. And so we aim to use this to help farmers address productivity and profitability mainly, but also that social license to operate and to diversify income streams. And so with that, I would like to conclude my presentation by thanking you for listening. And I, unfortunately, due to this forum, can't take questions live, but I'm very happy to receive questions via another means and very happy to talk further if anyone would like to get in touch.